The U.S. Central Bank set to raise interest rates in an hour's time, a half-point hike, the biggest in more than 20 years, is widely expected. We recently saw a similar move by the Bank of Canada. The market also looking for clues on how much more tightening we'll see. And make no mistake, the street is expecting aggressive action to tame inflation. As you know, the market has had a hard time coming to grips with these higher rates, particularly their cooling effect on the economy, considering we are seeing a lot of signs around the world of less growth. Meanwhile, we got another sign this morning of how higher rates are influencing our housing market. In Toronto, sales sank more than 40% in April compared to the same time last year, with many pointing to rapidly climbing mortgage rates as a key contributor. And we've even seen signs that prices are cooling off. Still up from where they were at this time last year, but they slipped from February to March, and now again from March into April. Let's get some more perspective on what's happening on the real estate side. John Pasalis tracks it closely. He's the president of Realosophy Realty. John, nice to see you as always. What was your reaction to this latest data?
So not at all surprised. I mean, the market's been turning quite quickly. And when that happens, we start monitoring the statistics weekly because it gives us far more insight into how quickly things are changing. And sales and prices have pretty much been declining week over week since mid-March. So we weren't surprised by this, but certainly it's not a typical trend. I mean, as we move into the spring market, typically sales pick up, and the exact opposite is happening right now. Sales are actually declining as we're moving into the spring market.
And when you're talking to buyers and sellers, what are the reasons why? How much of it would you say, for example, has to do with those higher rates?
So the higher rates haven't impacted we haven't felt it quite completely yet, because a lot of the people buying homes right now have rate holds. So, you know, when they're buying a house, they probably still have sort of those discounted rates of a month and a half ago. But what it's certainly having an impact on is shifting expectations. And a lot of people are seeing these higher rates as a sign that the market will cool down. It is cooling down. It's pulling some buyers out of the market as buyers wait. And that's putting downward pressure on prices, because a lot of the people who are selling today bought a home and they're not getting as many showings, they're not getting as many offers. And that's really what's been putting the downward pressure on prices the past 2 months.
John, there's also this separate conversation around housing affordability. We've seen it play out in Ottawa in a big way as well. And there have been many that wanted their opportunity to get into the housing market and were frustrated by those higher prices. But I wonder if these higher mortgage rates, to a certain extent, cancel out that affordability, even if prices come off their peak.
Well, 100%. Yeah. I mean, it's certainly going to, and that's probably what we're going to find. I mean, prices, you know, for low-rise homes probably are down about 150,000 over the past couple months. And we might see some more downward pressure. But to your point, I mean, if buyers by this summer are paying over 4% on their mortgage versus 2%, they're not going to see much of an impact on their monthly mortgage payments. Certainly that's going to not have a huge impact. And certainly I think they will probably end up canceling each other out effectively.
Interesting. Now, as for some of the other factors to be watching in the housing market, those things that might perhaps support prices, as we mentioned, while they have cooled from that peak, I think the bigger question a lot of people have on the pricing front is how much of a cool down that we'll ultimately see. There are other factors out there. I mean, certainly there are a lot of gainfully employed Canadians right now. Immigration is a key part of the Canadian economic story, and everybody coming to the country needs a place to live. What are you going to be watching closely to determine where prices go?
So I think the big thing that we're going to be keeping an eye on as we move into the summer, and the concern that we have is to what extent can buyers, you know, 3 months from now, afford today's prices at tomorrow's much higher rates, because they're going to be qualifying probably at a higher rate, which is stress test rate, which means they're not going to be able to borrow as much, but also they're going to be less inclined to borrow as much. So I think the big pressure on prices is not going to be, you know, distressed sellers who needs to sell. That's probably going to slow down as we move to the summer, as sellers are going to be more patient. It's probably just going to be not a lot of buyers out there who could afford these prices at today's interest rates. And I think that's certainly potentially going to put pressure on the market as we move into the second half of this year.
Well, a story we're watching certainly for the Toronto market, but for any of the housing markets across this country. John, appreciate your time as always. Thanks very much for the insight and analysis. John Pasalis, president of Toronto-based Realosophy Realty, joining us.